Why should investors have gold in their investment portfolios? Is it purely for capital preservation?
I think it's very important for an investor to hold gold, and we have four main reasons why investors should hold gold. The first reason being it provides long-term returns. Second, liquidity. Third, it has a portfolio impact. And fourth, diversifications. If I go to the first reason, long-term returns. So gold has provided about 8% on average long-term returns since 1971. And if you compare that to asset classes like equities and bonds, it's actually very compatible. Throughout the 40 years, gold has provided a reasonable return of about 8% in performance. It's a very decent performance for the asset class. And secondly, is the portfolio impact as well. Gold is very important as a strategic asset because we advise clients to hold about 5 to 10% of gold in the portfolio. And by having that allocation on multi-asset portfolio, it actually improves the risk-adjusted returns of the portfolio. And thirdly, it's quite liquid. Gold is one of the most traded, most liquid asset classes in the world. For an investor having a long-term allocation to all other asset classes, it's vital to have an asset class that has a huge liquidity. Gold trades about 100 billion a day. And the fourth reason being is the diversifications. It has low correlation to many other asset classes. So when equity and bond goes up, gold will stay flat. But when equity and bond goes down, gold usually will spike up. That providing a diversification benefit to investors.
How much gold should investors have in their portfolio?
By having 2 to 10% of your allocation to gold will actually improve the risk-adjusted return of your portfolio and is able to hedge against potential market downturn in equities. And between 2 to 10, it really depends on your risk, how risk averse you are. If you're more risk averse, maybe 10, less risk averse, maybe 2. But somewhere between the ballpark, 5% should be the average optimal allocation investors should have in gold.